let's jump right into this explainer. Today, we're pulling back the curtain on the most powerful, unseen force dictating your everyday financial life. And honestly, chances are you barely even know they're operating in the background. Look at this number, 12. Just 12 unelected people sitting in a room in Washington, D.C., making decisions that literally alter the lives of 330 million Americans. I mean, they wield more power than any corporation, and in a lot of practical ways, more direct day-to-day power than the government itself. So the crucial question we have to establish right out of the gate is, who actually pulls the strings on your mortgage, your groceries, and your job security? We all learned basic supply and demand in school, right? But the true mechanics of central banks, completely absent from our education. Well, today, that changes. That room we're talking about, that's the Federal Open Market Committee, or the FOMC. It's an independent entity created by Congress way back in 1913, and it answers to absolutely nobody but its own internal mandate. The president can't just easily fire the chairman, and Congress can't directly control their decisions. They sit all alone at the absolute top of the financial pyramid. Moving into Section 1, let's take a look at the Federal Reserve's mandate. They call this the dual mandate. It's essentially a constant high-stakes juggling act. On one hand, they have to keep people employed, while simultaneously trying to keep inflation from just destroying the value of the dollar. And a shift in either direction, that holds your entire financial life in the balance. Okay, Section 2, the 4 policy tools. Let's break down the actual economic machinery they use to do this. So there are 4 specific tools in their arsenal, and these are constantly being deployed to directly speed up or slow down your economic reality. Let's dig into what these powerful instruments actually are. The very first tool is the federal funds rate. Basically, it's the interest rate banks charge each other for overnight loans. You can think of it like a master dial for the economy. Raising rates cascades through the entire financial system. It makes your mortgages, your car loans, and your credit cards way more expensive. It's a completely deliberate move to slow down spending and kill inflation, but they kind of have to sacrifice economic growth to make it happen. Now, conversely, when they turn that dial the other way and cut this rate, borrowing gets incredibly cheap and the economy accelerates. Businesses expand, jobs are created, but as we all know, this brings a huge, dangerous risk of igniting aggressive inflation if that dial gets turned up too high, too fast. Their second tool is quantitative easing, or QE. This is where the Fed simply creates digital dollars out of thin air to buy government bonds and flood banks with cash. And the sheer scale here is absolutely staggering. They exploded their balance sheet from $870 billion in 2008 to an astronomical $9 trillion by 2022. To put that into perspective, every new dollar created dilutes the value of the ones already sitting in your pocket. It's essentially a massive, hidden tax. Tool number 3 is reserve requirements. A high requirement keeps cash locked securely in bank vaults, which tightens the money supply. But a low requirement? That unleashes a massive flood of lending potential. And incredibly, back in March 2020, the Fed dropped this requirement to 0 for the very first time in history. They have total control over this valve. And then we have tool number 4, forward guidance. This is by far the most subtle and, frankly, the most underestimated tool they have. Swapping just a single vague word for another in a press conference can instantly move trillions of dollars globally before any actual action is even taken. If the Fed chairman steps up to the mic and says they are concerned instead of monitoring, markets can literally crash in milliseconds. Their words are monetary policy. Section 3, the investor's rate playbook. Now it's time to pivot from understanding this big macroeconomic machine and look at your microeconomic reality. You might actually want to take a screenshot of this playbook right now because it perfectly maps out which assets tend to win in these different rate environments. When they're raising rates, short-term treasuries are the winners, while highly leveraged companies really suffer. What about when they're cutting rates? Real estate and growth stocks usually surge on all that cheap borrowing. And if they're just holding steady, you're going to want to look to stable dividend stocks. You see, you really don't need a crystal ball to predict the Fed. You just need to know which of these 3 environments we're currently in. And keep in mind, the Federal Reserve announces these massive market-shifting decisions exactly 8 times a year. That gives you 8 distinct calendar dates to listen to their forward guidance and potentially reposition your wealth. That is 8 moments every single year where you can take back control.
Which brings us to Section 4, Mastering the Fed Cycle.
To really win this game, you've got to shift your mindset. You have to move from being a reactive victim who gets soaked by unexpected economic rain to becoming an informed, umbrella-holding investor who uses these inevitable policy shifts to their advantage. Once you truly understand the cycle, Fed decisions stop happening to you and they start happening for you. Because look, while the specific tools have definitely evolved from 1913 straight into today, the underlying cycle of raising, holding, and cutting is historically incredibly consistent. It's a predictable rhythm, and because it's predictable, it is entirely actionable.
With 8 crucial decisions happening every single year, affecting absolutely everything from your savings to your future, the only question left to ask yourself is this: are you going to let the economy just happen to you, or are you going to use this newfound knowledge to position yourself before the rest of the world even notices? Understanding this system is worth more than any hot stock tip out there. So the next time those 12 people meet in that room in DC, what is it going to mean for your money?